Hello and welcome everyone to Gold Asset of the Day for the 8th of December 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get into a new week here, what do you need to be aware of? Well, firstly, hedge funds and money managers in the last week, they've trimmed their net long position on gold ever so slightly by 1%. So of those funds that are having a position on gold, 75% are currently long. It's also very similar with silver, very slight tweak in the last week with funds increasing their net long position on silver by 1%. Now, obviously what we're seeing at the moment is this range-bound price action consolidation, which we talked you through on the week ahead commodity report, and also to look out for platinum and palladium this week, which have already had big breakouts at the start of the week, over 400 point moves to the upside here. So especially palladium, I hope you've capitalized on that slingshot move higher we've seen here at the start of the week. You can definitely see here, you're building a base at the moment on the metals. We've had that very typical correction throughout the middle of November, towards the end of November, as we moved into Thanksgiving, Black Friday, end of month profit taking, contract settlement. Now you're seeing fresh capital come into the market. You're starting to see this bounce and risk on environment as well that we've seen at the start of the week here, with oil prices rallying significantly, a 5% move to the upside that we talked you through on the week ahead commodity report, to look out for 60 to 65 US dollars per barrel as that buy zone. We've seen oil prices break back above 70 US dollars per barrel. So then as it relates directly to gold over the course of this week, I am expecting more range-bound price action for gold. So essentially support to be coming in between 1,760 to 1,770 US dollars per ounce, and then resistance at 1,810 up to 1,820 US dollars per ounce. So I'm expecting more range-bound price action over this week, but then as we go into next week, we can see some huge moves. You've essentially got the FOMC statement next week, the European Central Bank announcement, you've got the Bank of England, you've got quad witching. There is a lot going on in the markets next week, which will create volatility, impulse moves that you can capitalize on extremely quickly on the metals. You do not want to miss out on that. And then at the end of this week, we've also got inflation data as well, which can cause a huge move on Friday too. As you mentioned before, you really want to make sure that you're finishing the year strong here and capitalizing on this huge volatility that we have right now in the market, so that you can really hit the ground running into 2022 and finish 2021 on a high note here, because there are going to be some massive opportunities, particularly over this cycle between now and the end of December. They're moving into Q1 of 2022 to capitalize massively on the commodity moves that we get at this time of year, and some very specific cycles that start to come into play that you really want to make sure you've got on your radar and that you're fully available to make the most of it at this time of year. As you know, many traders out there over the last couple of weeks, off the back of the Thanksgiving and Black Friday liquidation events we've seen on the market, and following on from that, the corrections in oil, the corrections in the stock market, the corrections in cryptocurrency, many traders have been rug pulled over the last couple of weeks out there, and essentially just using outdated strategies, outdated technical indicators with no awareness of capital flows, the cycles at this time of year where you really want to make sure you're capitalizing massively. Essentially, this comes down to traders using outdated strategies in the market, using technical indicators which do not work. And as you know, technical analysis itself does not work. Many traders out there using technical analysis, they constantly get chopped up in the market. You will get crushed if you only use technical analysis. You need a lot more data, market intelligence, and edge in the market to make sure that you're maximizing on these opportunities, especially at this time of year. It should be one of the best times of year for you as a trader. It shouldn't be one of the worst times of year, which unfortunately we've seen that a lot recently with many traders getting that rug pull over the last couple of weeks. Especially we've seen that, of course, in the crypto markets, we've seen that in the stock markets, we've seen it in the energy markets, anything from natural gas to crude oil, where traders have just been on the wrong side of those moves. We definitely don't want that for you. This is where you want to be utilizing a research-driven approach to the market, utilizing data, market intelligence, statistics, understanding the daily, the weekly, the monthly, the quarterly cycles in the market. Alongside that, understand and learn capital flows, the intermarket correlations, the ratios in the market, understand the major news items which will be big catalysts for impulse moves, understand the fundamentals, the macroeconomics, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.